Well, hello. Let's see what's going on. So that bit of thrust, kind of wanted to take a step back in the Aussie dollar and look at the 4-hour chart. Pretty good bar, and some follow through after that. We're still chewing into this range. It's a little bit concerning because, as far as any plans to go long, because we sliced through what had been good support, good resistance on one side, zoomed, and then came back to touch it on the other side, and you kind of like it to see it not be so sloppy. However, moving averages tend to be sloppier, and since that's there too, that may be part of the reason why we're slopping around. Looking at the 20, I finally cleaned it all up, and you can see if we scrunch it up, here's this big consolidation pattern at our current peak, and then we break down out of that, make a new low, make a lower high, make a lower low, make a lower high, and then the thrust that we had the other day, and a small pullback out of that. Pretty weak. Couldn't even get to 382. It looked like everybody, maybe even the people just front running the 382, were the ones that were able to get the market to sell off. I still don't know if I really want to sell here. It's been kind of tricky. I don't like the way that it took that out. You know, you got big thrust here, so you do have to be kind of concerned, even if you see one of these minor swing highs taken out. But I really don't like it when markets trade like that. If I had been thinking about getting long in here, and sometimes I'll draw a speculative channel like that to look for a way in, and I might have considered doing it with the sliding parallel here. Let's zoom in and look at that. So after we made this high, and we would come down and buy this retest here, 81, and depending on how much you would want to risk, I had gone to bed. I was done trading for the day. But depending on how much you wanted to risk, you could put a stop under these if you wanted to, but really you kind of need to be under here, and that's kind of disturbing to do because of the thrust that was preceding this big movement. So it's never fun to play in the opposite direction of thrust unless you really have something to lean on. And in this area, did we? No. I guess this coil here, but nothing where you can go, wow, a lot of traders are really going to be looking at that. So not really the greatest place to be thinking about long. And the unfortunate thing is not really a great or easy way to short either. Excuse me. If you had drawn in this median line set like I had, you might have considered taking a short on here, but then where's your stop? And at this point, you do have a little double top. But no confirmation that things were breaking lower until you got here. If you really wanted to try and get into this thing, you could do the same thing here and draw another little micro channel, and maybe drawn it up over here and sold there with a stop over these if you're just dying to get short. I wasn't particularly dying to get short, one, because I was asleep, and two, because I don't really want to be playing against a market that's already run down quite a bit And so if we look at this hourly, we're kind of up against extremes already. We can see how we found support at various times in the past on these half frequencies, which we are there now, also at the origin of this thrust. Wasn't really excited about the area. If I wanted to sell because I thought we were going to work our way down to this line, then I would want to do it on a retrace back up to here with a small stop over these guys. And that's a nice clearly defined swing on the hourly chart. You can see that I drew this little kind of over-under slop. All this is the same frequency of this median line copied down to show you that, hey, that's the amount that we bled through it is how much we went back on the other side. And we can definitely, this is not a defined science. Where we hang this B point is not solid and concrete by any means at all. You just have to pick something and go with it and then trade off of that. I kind of liked going here because that gave me some more opportunities with things actually touching lines. If I go over here, I haven't really touched anything, just barely missed it. Maybe if you do it like this and then let this slop through, that gives you the same line we were looking at on the 20-minute chart. The point isn't to obsess over your lines. The point is to observe what the market is doing and then draw lines to give you good trades in the same direction that the market is going. I'm kind of sitting on my hands because I don't want to get caught up in this area. But if we go much lower, then I'm really going to start thinking about selling retraces rather than looking for a bounce up to this median line, because I'm going to have to consider the possibility more and more and more that this is going to fail. And failures tend to move the market very strongly. So if we fail to reach this median line, which is possible, I mean, we've talked about this big daily multi-year range that we've been bumping up against for some time now. And the first time we penetrated it very deeply. It may not be too surprising that we only just barely poke at it this time and come rolling over. That would make this median line fail. And where would our target be if that happened? Well, we expect it to get to this lower median line parallel, maybe do something and bounce off of it and then slide through it. And I would expect price to come down and challenge these lows if we failed to hit this median line target. So that is that. Let's look at by the way, I wouldn't really like this trade. I mean, this is so scalpy. I mean, you can't really know how far you're going to go. Your target would be from here to the lower median line parallel. And if you did get it all, you would get about 45 pips. And where's your stop? Up there, it's 25 pips. So just barely over 2 to 1. It's okay. But I kind of feel like I'm chasing myself doing that, or chasing price. Alright, let's look at other things. Yen. Not real happy that it made this poke down again, but I think we would have had the same feelings in here in mid-March and here in mid-February if we'd tried this sort of similar trade. So there's really nothing to do but be patient and wait and not get all been out of shape while price does a dance back and forth, because really, I mean, this is just a big upsloping range, and maybe it is done and it will come down more. However, I think that the end, because of the things that we've looked at the daily chart in the past, has more momentum to the upside than anything else. So if we look at this daily chart, again, this is a weekly chart, all these crazy bull bars, big consolidation pattern for over half a year, break out of it, pull back in a little bit. Not going to be surprised at all if this turns into a coil and then takes off some more. There is nothing on this weekly chart to make me think that we'd have to be particularly worried about things turning around again after that kind of thrust in the new direction. You know, maybe we do come across some big Fibonacci, but I think this 382 is what we've been chewing on for, since last May, over a year now. So I don't really think there's much in the way, it's just a matter of time. Eventually we're going to break out and go up. Can be wrong, but that, I think, is the most likely path of price. Okay. What else? Canada, still slopping around. We can say now that we've made newer highs. If we take out this little poke low, then we might be looking for shorts again. Until that happens, or until we retrace far enough to where we might be able to play against these guys, there's not much to do. IWM, the Russell, came in pretty hard this morning. It's retraced up. It's starting to get looking more like a stair step down than a stair step up. Couldn't take this out, which is the opposite of what the ES has done. Again, it melted down. Let's look at it on the SPY chart. It melted down, took these out, but then came right across here. This is turning out to be a big multi-pivot line that encompassing old gaps, old highs, new gaps, other old highs. This is quite the line right in there. I wonder how far back this thing goes, just out of curiosity. Still seems to even have something to do with price way back there. So, again, like we've talked about in the past, we don't like to see the ES outperforming, the big blue chips outperforming the internals of the market, which are the Russell and the NASDAQ and other sectors that you may want to look at. I know Dave Landry, he spends time every day just scrolling through a big list of stocks that he thinks have decent volume, and he said recently that his little daily analysis hasn't been looking pretty. There are a lot of stocks in downtrends in spite of what's going on in the ES. So it could be that we're seeing some weakness on the inside that may lead to general market decline. We'll see. So speaking of the NASDAQ, still chewing on this high. We popped it and came back in. Multi bottoms. This is very toppy looking on this chart, and not so great looking on a daily either. Let's clean all this. So there's our lows. We don't need to get in a big hurry, but if we take these out, you want to be selling retraces and not buying them anymore. I mean, this doesn't always work. You get something similar down here, and that's why everybody got all excited in 2011, because we plunged through this, hit it from the backside, looked like we were done, and then grinded back up into the range again, and that sort of put everything back into play on the upside as well. So there's really no hurry. We don't want to get caught in something like that. Let's let the market show us that we are going to go down before we get all excited about getting short. But again, unless the situation with the internals shapes up and starts looking a little bit better, then we don't really have a whole lot of hope right now. Again, just wait and see. Okay. What have we not talked about? I guess when we look at banks, yeah, we're grinding up into this energy point. And what's an energy point? That's something that Tim Morge defined as a nice confluence of lines that are all crossed together like this. This happens to be this old high, midpoint of this gap, this upsloping median line that seemed to have something to do with price. We just barely missed it there, crossed through it and bled down here, and this downsloping median line, which is still a little experimental, but did seem to hold price here with a little bit of slop. So who knows, maybe that's what will happen here. We did miss getting down here before, so we might expect higher highs even. Let's look at a daily. And why might we expect higher highs? Well, we really haven't done anything to hurt the trend yet. It's been fairly choppy this whole way up. And when you miss reaching a median line target like this, you start to wonder whether this one is really going to hold price, because you kind of expect it to break. Because why didn't we get to the median line target? So someone was out there buying. Okay, Eurowad. Yeah, we didn't get the bleed down that we were thinking about to go here, but sure enough, after a little bounce off this channel, a little correction to come right back to where this line we had drawn, which are these highs in here, they got busted, and there we go. We're starting to work our way through it. So don't get attached to your lines once you see a change in behavior like this. Let the change in behavior tell you that you need to be paying attention to a possible new direction or possible new sideways after a trend. Now, let's go back to our Aussie chart, because we were talking about failures. What would we mean if we failed on this daily chart? Well, if we failed to reach this median line target and just started making swing lows, new lower lows, and new lower highs on down, that would be a failure. And I would think that we would not be turning around and make it up to this median line target. And when you have that type of failure, it was called Hagopian's rule. And why such a fancy name? Well, it was named after the man that worked with Dr. Andrews, and they met in a group weekly, or you can get the clear story from Tim Morge. He's our big median line guy. But basically, Dr. Hagopian asked Dr. Alan Andrews, so what? You keep on telling me this principle that we should meet median line targets about 80% of the time. What happens when we don't? And Dr. Andrews' favorite reply to the what ifs, anytime he was presented with a question, was, well, that's an interesting question. I look forward to your answer. Meaning, hey, you're smart. Why don't you go investigate and you come back and tell us all? Because that's what this group is for. So, what they found out, or what Dr. Hagopian found out, was when price did fail to meet a target like this in the median line, then it tended not to find support on the next line below or above, depending on which way it failed. And it would tend to go to the next line below, which would be this warning line. Actually, the warning line is this one way down here. This is a halfway line that I have drawn in. So fail to reach here means going all the way down here. And that makes sense because we would expect this downtrend to continue. We've got these pokes at new lower lows. We're still making lower highs. Why shouldn't a new lower low be the next thing? So, sometime maybe in the next few months, maybe we meet this median line target and meet this warning line target at the same time. Also, we've been looking at this one-to-one area that we expect when it's resistance on one side, it'll be support on the other, and that's not happening right now. We're showing a lot more weakness. I would have expected that if we were going to go up and meet this over the next few days or weeks, that we would have already bounced and fulfilled this what was resistance has become support area, and then started to work our way up. But obviously, whatever the news was that created this big spike on our 20-minute chart was bad juju, and things aren't working out that way. So we've got some fundamentals that are telling us, let's not get stubborn about our technical picture and go with what's happening. In fact, this might even be an interesting area that if it came down more, you could consider selling against again. This was a success, then it failed to turn price around. We expect a failure to produce support on the other side. That doesn't work, so that fails again. Then we come back and test it from the other side one more time and work our way down. So it's like a failure of a failure. And so long as you can keep your head wrapped around it, then they're really good signals for which way you should be hitting in the market. Basically, it all boils down to, can you just follow instead of being stubborn? We could say we're trying to follow this up, but what's price doing right now? It's pulling back in, and we're taking out things that we expected to provide some sort of support, and they're not working. So when things stop working, we have to start thinking about going the other way, or being aware that we might be getting stuck in a range. Alright, I think that's all I had to say this morning. We will cap it off there and see about coming back maybe this afternoon before the market closes if we think of something cool or neat to look at. Alright, talk to you later.